Students, how are you all? Welcome to my channel krishnasinghdeo. So if you are student of Maharashtra State Board, this is the video for you. If you belong to commerce stream, we are completing over here one chapter called Final Accounts of the Partnership. This is first chapter under your syllabus, and we have already discussed in detail what all is covered in the syllabus for class 12. If you have missed that video, the link is there in description box. You can go and check out that video. It's going to be helpful for you. Now let us start today's work. I have skipped the theoretical part where meaning of partnership and various other theoretical portion is being covered. I assume that all of you will be able to understand on your own. What are we going to do today? We are going to start our chapter from the part which will be applied in doing your practical or numerical problems. So let us start discussing what are those aspects. Today we are going to cover the method of making capital account by the firm. So basically there are two methods of making the capital account of the firm. You can see on the screen, this is the book of State Board, which is given by State Board. You can get the PDF of it easily from internet. So let's start. So here is your book, which you can get easily on internet, and I'm sure all of you must have bought hard copies yesterday. Okay, so we are discussing over here what are the methods of maintaining capital accounts by the partnership firm. There could be two methods of maintaining capital account by the firm. Method number one is called fixed capital method, and method number two is called fluctuating capital method. Now let us understand one by one what is fixed capital account method and what is fluctuating capital account method. Fixed capital account method is the method under which two set of accounts will be prepared. What are these two sets of accounts? Number one is capital account and number two is current account. So for each partner, firm is going to prepare two accounts. One is capital account. What is capital account? We are going to discuss in detail in today's video only. And what are the ingredients of current account, or what are the components of current account? This is also will be discussed. Now the second method is called fluctuating capital method. For you to understand it easily, you say think that there are two methods under which first category has two accounts, and in second category there is only one account maintained. So fluctuating capital method is the method under which only one set of account is prepared for each partner, and it is called capital account. Okay, now let us go for number one method, which is fixed capital method. Under fixed capital method, we see there are two set of accounts prepared for each partner. So first one is called capital account. So how do we prepare the partner's capital account? As I said, two set of accounts are prepared for each partner. So are we going to make, if there are two partners, are we going to make four accounts? Current account of one partner, current account of another partner, capital account of one partner, and capital account of another partner? No, the format of account is slightly different, which will accommodate all the partners in one account or one ledger format itself. So it will remind you of the cash book which you had studied in the previous year. What do we do over here? You can see there is particular one column of particular, there is no column of date, because this account is prepared at the end of year or in the beginning of year in case of admission. So you need not to make date column, one date column, and we are generally omitting the general folio column because there is no space for that. So we omit making general folio column. Then we prepare amount column for each partner, and each partner's name is written on top of the account. Suppose X and Y as it is written over here. X and Y, two partners are there. So X's account and Y's account will be maintained over here. And similar thing will be done on the credit side. Remember student, account is format based subject. So always you have to prepare the format of account very, very properly. Otherwise you may lose your marks. Okay. So this is the entire format under which how many partners are there, those many amount column will be there. If there are three partners, X, Y, and Z also, then one more account will be added in, one more column will be added in the amount column. Okay, I hope this is clear to you. Now we are going to see what comes on the debit side and what comes on the credit side of the capital account of partner. So on the debit side, balance CD is written. Why balance CD is written? Because capital account is a liability account in nature. So all the capital account will have debit balances, credit balances, sorry, and opening balance is going to come on the credit side only. If it is a continuing business, means which was it started in the previous year and carried forward to the current year, then you will have opening balance, and always opening balances are written on the credit side. So we write by balance carried down, brought down, by balance brought down. But if the business has started in the current year itself, then this by balance brought down entry won't be there, and instead of this, by cash or bank account will be there, because the partners are bringing the capital, so we will have to make the entry for this. So these two entries are there on the credit side. What else can come on the credit side? Sometimes it happens so that the balance is brought forward from the last year, means balance brought down will be there, and as well as cash and bank account will also appear on the debit side. Why cash and bank account is going to appear on the debit side? This is a possibility that one of the partners or both the partners or whatever number of partners are there are introducing further capital. In case they introduce further capital, which is called additional capital, then also it has to be recorded, and where it will be recorded, it will be recorded on the credit side. So as you can see over here, it is written additional capital. Sometimes partner bring in the assets also in the business. The asset can be stock, that asset can be furniture or any other valuable item which is considered as asset. This is also written on the credit side. So in short, what do we understand by the credit side of capital account? That whatever is increasing partner's capital account is coming on the credit side, whether it is introduction of further capital or it is in the form of cash or in kind, means in the form of asset. Then on the debit side, usually only the balance carried down comes on the debit side, but sometimes this is also a possibility that a partner withdraws the capital permanently. Means 5 lakh, for example, 5 lakh was his capital earlier, and now the partner is withdrawing the capital. Let's say 2 lakh is withdrawn by him. So two drawings you are going to write over here. Okay, so two drawings, no, sorry, to cash or bank. This will be withdrawal of the capital. Drawings is a separate thing. There are two types of drawings against capital and drawings against profit. So that drawings comes under current account and this fixed capital account. But if permanently capital is withdrawn, means from 5 lakh the capital has gone down to 3 lakh and 2 lakh is being withdrawn, then it is going to come over here on the debit side. So only few items are there in the capital account. Generally, only the balance brought down and balance carried down are seen, but in the questions where there is an information about the additional capital introduction, it will also be incorporated. Now let us see what are the journal entries related to it, because journal entries are the basis for posting into the ledger. Okay, so you should always understand the ledger account through the journal entry. So what is the journal entry for introduction of capital? And journal entry is cash account or bank account to partners capital account, and this is the reason on the credit side of partners capital account we have written what is written on the opposite side of it. This is cash and bank. Okay, then when capital is brought in by the partner in the form of asset, instead of cash, if a partner is bringing any asset, so entry will be asset account debit to partners capital account. So these two entries are going to be passed on the credit side. And what will happen in the debit side? Obviously, you may not have any entry for balance brought down and balance carried down. There are no entries passed. Journal entries are not passed for brought forward balances and carried forward balances. So no entries for that. Now let's see partners current account. What comes under partners current account? As we discussed under the partnership accounting, when the capital account is maintained as per fixed capital, there are two sets of accounts which are maintained. So what is first set of account? This is capital account we have discussed. Now second set of account is current account for each partner. What is the format? As far as format is concerned, format is going to be same only. Debit side, under particular, you will write all the entries. Then you have two amount columns. If there are two partners, if there are more than two partners, more than two amount columns are going to be there. So X, Y, particular on both the sides. There will not be any date column. There will not be any general folio column. Okay. After this, what is coming on the debit side and credit side? It is important to understand. So on the debit side and credit side, First of all, if we talk about the credit side, because it is a liability account, all the balances usually should appear on the credit side, means the opening balance should usually appear on the credit side only. So first of all, opening balance, but is it a possibility that a partner has withdrawn more than the money invested by him? Yes, it is a possibility. In that case, the partner will have a debit balance. So debit balance will be written on the debit side, to balance brought down. After this, the partner, if he is getting any interest on capital from the firm, what is interest on capital? The money invested by the partner in the firm. Sometimes they get interest on capital, and where it should be written? It should be written in the partnership deed. If it is written in the partnership deed, agreed by the partner, then each partner is going to get interest on capital, and this interest on capital will be written on the credit side. Next is salaries. If any salaries are given to the partners, there are nominal partners, there are active partner, there are dormant or sleeping partners. So normally active partners get the salary. So salaries are given over here, and on the credit side it will be written. Again, the rule is going to be same. Whatever increases partners' capital account is going to be on the credit side, and whatever decreases partners' capital account or current account, it is going to be on the credit side. So as far as rule is concerned, the rule of current account and capital account is going to be same. Now commission. What is commission? This commission can be based on sales. This commission can be based on profit. Okay, so whatever commission is agreed among the partner, that commission comes on the credit side. Then at the end, the share of profit comes over here, and balance CD will be only in the case the opening balance is over here. Otherwise, balance CD is going to be on the debit side. Now let us see what comes on the debit side. Debit side includes drawings made by the partner. What is the meaning of drawings? You must have studied in class 11. Drawings are the money or goods withdrawn by the partner from the business. So drawings are going to come over here. And after this, what is going to come? Apart from drawing, there is going to be interest on drawings. If any interest on drawing is charged by the firm, that interest on drawings is going to come over here. And then you have, if there is a loss in the firm, then that loss of share of loss is going to come over here. So share of loss is also going to come over here. And then balance CD. If your starting point is here, then your balance CD is going to come over here. And if your starting point is here, the chances are your balance CD is going to come over here. So this is the entire format of partners' capital account and current account. Whenever there is a fixed capital method followed by the firm, these two set of accounts are open. Now, let us see the journal entries related to it. So, for interest on capital allowed to the partner, what will be the journal entry? The journal entry is going to be interest on capital account debit to partner's current account. Why it is written capital / current account? Because later on we will see if fluctuating capital is being followed, then instead of current account, we will write only capital account. So, right now, do not get confused, just focus on current account. Then second entry, profit and loss account debit to interest on capital. So, these are called adjusting and closing entries. This is the entry for giving the interest on capital to the partner, and this is by closing the account. So this interest on capital account which was debited in the first entry is credited in the second entry. Means by passing this entry, what are we doing? We are closing interest on capital account. Next entry, if any salary, commission or any other remuneration is given to the partner, what is going to be the entry? Again, there will be two entries. First entry is salary or commission account debit to the partner's current account or capital account, and second entry, the salary or commission account will be closed by transferring it to profit and loss account. So you can see profit and loss account debit to salaries and commission. Means whatever account we open, either it is interest on capital or salary account or commission account, it has to be closed also. Next is cash or goods taken by the partner, means drawings. So for drawings account debit to cash or goods account will be there, and the second entry will be closed into the partner's current account. So current account is debited, and on the credit side, what is there? Drawings is there. Then after this, interest on drawing. Again, if for interest on drawing also, there are two entries. Partner's current account will be debited to interest on drawing, and when we close this, what will happen? Interest on capital account, interest on drawing account will be debited, and profit and loss will be credited. Why profit and loss account is credited? Always remember, when profit and loss account is credited, means that this is an income which is increasing the profit. Whereas when you see interest on Capital, you see profit and loss account is debited over here. In case of salary also profit and loss account is debited. So whenever profit and loss account is getting debited, it means it's a loss or expense for the firm, and whenever it is income, profit and loss account will be credited. So I hope students you all have understood how to prepare capital account under fixed capital method. In the coming classes, we will do one question also based on this, but for today only this much, so that you can revise it properly. I'm purposely keeping the video short so that you can revise properly and you can draw the format on your own and can see what is your understanding. If you are still confused, you can write in the comment box. I will clarify your doubt. And if you have liked the video, please do not forget to share and subscribe to my channel, because your subscription and your like and your sharing with other friends will motivate me, and I will come up with more and more videos based on your subject. Have a great day.